Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors, and welcome to this brand new Tuesday edition of PreMarket Prep, brought to you by Thinkorswim and TD Ameritrade. I'm Spencer Israel, as always here with Joel Elconin and Dennis Dick. We have one of the biggest earnings days of the year today, so we're going to try to get through as many as we possibly can. We've also got two guests for you at 8:20. We're going to be joined by an old friend of Joel's, Drew Marcus. He is the managing partner and portfolio manager at Sugarloaf Rock Capital. And then we'll also be joined at 8:40 by Nick Shaheen, our resident options guru. But in the meantime, though, Joel, tell us how we're doing in the S&Ps this morning.
We're doing okay. We're up $1.75. Just got over Monday's high, 49 even. So nice round number, 2150 on the upside. That's your level to take out. On the downside, the low right by the close at 44 and a quarter, low 44 even. Crude back in the middle 50s here, big number at 51. That was high from the last couple days. And the yo-yo action, gold and silver continues, both trading in the green. Dennis, how you doing this morning?
Dennis is on mute, but he is off mute here now. Doing well. What's going on?
Not much. Big earnings season. Some big beats here. And can some of these stocks hold on to these gains is the big question.
Well, there's a lot of other questions here, too. Obviously, this market, we've got separation here. You see some stocks going one direction, some stocks going the other direction. We've talked about the weakness in the biotechs. We've talked about the weakness in some of the defensive stocks. I'm kind of seeing this morning a little bit of that trade reverse here this morning, especially off those Procter & Gamble earnings here. I hope you bought your stock back in or sold your puts there, Joel, because PG is up 2 points here this morning on their earnings report.
And, you know, Dennis, that's one thing about the weeklies is you got to make a decision on Fridays. And I did.
Brought it in.
I brought it in, and I didn't put it back on because of the earnings, getting a nice pop. But, Dennis,
nice.
Procter & Gamble up $1.90. You must be licking your chops on this one.
I just say it's a lot of air in here because we had a 4-point fall, which is uncharacteristic for Procter & Gamble. Now you're getting half of it back, 86. So, you know, I agree. I think I can't be chasing and buying something like this up here. I've been saying on the show that I didn't think there was any value in the higher 80s. Now it's starting to get back up there. I'd love it to get to 87, 88 just to put on a short on the stock, but I just don't know if it's got the gas to get there. 86 looks good. It's just I feel like you got to almost give it to 88 if you're shorting at 86, and I don't like risking 2 points. So it's almost the risk return for me just because I'm so risk adverse. And it's funny, you know, I've been a trader for 17 years, but that's how I've kept in business is by placing very low risk trades. And how do you really control the risk? Do you understand what I mean? Like if I short at 86, don't you have to kind of give it to 88?
I guess it depends what you're looking for. If you're trying to get 4 points out of the trade, sure you do. You know,
Yeah.
You need to give it that kind of risk-reward ratio.
It's hard to just pick, you know, where it's going to stop. I mean, it's a nice whole number. You can say, oh, well, 86, that's where we bottomed in early September. Maybe that's where we're coming back to. It's a 50% retracement from the last week of moves when it went from 88 to 84. I like it short here as opposed to long. But I just feel like it's hard to say that 86 is going to be the high because who knows? It could go to 86 and a half, it could go 87. So I think I'm sitting on my hands on it despite wanting to short it.
Yeah, I mean, the one thing I noticed about this one, too, and it helped me out a little bit, the stock went ex-dividend. On the day before it was ex-dividend, it was weak, and then it had the ex-dividend day, and it was really weak on that. So no one was buying it ahead of the dividend. It took the heat. I mean, big red candles. I like to see it fill the gap, even though that's a dividend gap. I think 86.30, that's minor resistance. But in order to fill the gap this, you need to get to 87.43. That was a low on the 18th.
There is a theme here, though, and I'll tell you just so, you know, the last 24 hours is that the earnings have been faded here. There's been a lot, not all of them. You know, we saw some follow through. T-Mobile had some huge follow through yesterday, but Visa was really chopping around last night. It was up, it was down, it was all over the place. It was like a yo-yo. I noticed Under Armour was way up on their earnings report. Then it went all the way and got way down, and now it's come back up. So it seems to be like just a lot of chop around these earnings reports here. People are trying to figure out where they want to go. Let's jump into the Visa report last night because I just want to talk about the after hours action in this thing because I saw it pop and then I saw it drop. And then I saw it pop back to even again. Then it dropped another buck. Then it came all the way back to even. Then it dropped another dollar. I think 3, 4 times. There was a dollar in there between 82 and 83. Can you count an after hours chart how many times this thing chopped around between 82 and 83?
Boom, boom. I'd say at least 3 times here, and now you're kind of just stuck in the middle. The initial pop, 84.66. They took it under 82. Back up to the mid 83s, down to the lower 82s, back up to 83, and now just kind of consolidating. How are we trading down here? What was the close? Because we talk about the close being a good.
83.17.
There you go. There's your swing number. Let the Bulls and the Bears battle it out there.
Give us the numbers for Visa, Spencer, because we haven't talked any of the actual numbers here for the reports. We're just breaking down the
No, I thought
technicals.
numbers
But
don't matter now. Q4.
it matters.
All
That's
right,
what
now Q4 adjusted EPS 78 cents versus 73 cents. Sales of 4.26 billion versus 4.23 billion. They also see fiscal year 17 net revenue growth of 16 to 18%.
That all sounds really good. The one consideration, I'm going to say it, we say it on the show all the time with the earnings report. What has the stock done going into the report? And if it's been going straight up or if it's been moving up ahead of the report, they need to blow it away. And those are real good numbers. I wouldn't say they blew it away here, though. And I think that's why you're seeing the stock not trade higher, at least here early on trade this morning. But it wasn't a bad report either. So you really got a battle between the Bulls and the Bears. And maybe that's why you're seeing, the Bulls are saying those are pretty good numbers. The Bears are saying they aren't good enough to justify the 10% run up it's had in the last 3 months. So that's the battleground here. I will say major, super duper extra resistance, Joel, using your words there, up at $84. So if this thing decides to go into rally mode here, I do see lots of resistance in the upper 83s.
And also keeping an eye on that close, 83.17. That's the mark.
So big reports here this morning. There's like 132 stocks reporting here this morning, so we can't cover them all, obviously. So if you want a specific stock to cover in the chat or tweet it at me, we'll cover it. We'll cover the majors, though. We'll go through them right now. Let's go back to Under Armour here because UA has been shopping around just like Visa. I saw it trading up. I saw it trading down. I saw it trading up. Now it's up again. Spencer, give us the UA numbers, and then we'll try to decipher this technical after-hours trading.
Yeah, this is one of my favorite stocks for sure. Q3 EPS 29 cents. That's a 4-cent beat. Sales of 1.472 billion versus 1.45. So a beat on the top and a beat on the bottom. They also reaffirmed their fiscal year 16 sales guidance and operating income.
Joel, talk about the pre-market action because it's been crazy.
All over the place. Spike up to 40.50 on the headline number.
$40.
$40.
And then where was the subsequent spike down to?
36.56. So just a 4 point.
range.
Yeah, no big
The
deal.
first bar.
Nah.
Second bar.
And good volume being thrown around here, too. Currently trading up 53 cents at 38.43. Just a couple good numbers to keep an eye on here if you're so inclined. Trade this wild child today. Couple highs over 39. That's going to be my focus in the issue today. You had a high at 920 and 912. You did take that out by a considerable margin, but not a lot of stock traded probably at those extreme levels. That's your resistance now. Above that, sure, you can climb up near that $40 psychological level. Had a couple highs at 40. 992 and 4002. This is back at the end of September. Trying to put a nice little bottom here if in fact we do get into the lower 37 handle, the mid to the lower 37 handle. I think you'll find buyers.
So other stocks in the chat, Solar City, Disney, Gilead, we'll get to those in just a few minutes here. I just want to cover the other major earnings reports here from this morning. Caterpillar getting the beats here. CAT has had a nice run up as well. We talked about the major resistance up at $90 a week ago. I was hoping to get a good report and pop into that resistance so I could short it. Not the case, though. They are hitting the CAT here this morning on the numbers. Spencer.
It's because they missed big on the revenue. Q3 EPS 85 cents. That's a nice 9-cent beat, but revenue 9.16 billion versus 9.87. So a big miss there.
Stock down 2 points here in the pre-market. Joel, the levels.
Oh boy, oh boy. This one, a little profit taking ahead of the report here as you got into the mid 89 handle. What we're looking at now is support. Trying to find support in the issue. The pre market low 83.70. Not for me though. Lower 83s, 83.14. That was your low on November 28th, and then I think you got a little gap in there to fill. This is called 83 bucks. 82.88 fills the gap, but for me, buck and a half lower here. That's your major support. Coming back on the upside, trying to get over 85.55. The low from yesterday, 85.54. So if you're trying to get out here at the within a gap fill, maybe 85.50, and the close at 85.99.
General Motors, I saw a
Woohoo!
huge pop in that, but it's quietly giving back half of the gains because I saw it ticking up to 34 here this morning. It's now 33.40. Had a huge run up ahead of the earnings
Yeah.
report yesterday, rallying over $1 ahead of the report. Spencer, give us the numbers from this morning on GM.
Yeah, I thought I saw a party in the GM Tower as I drove into work today. Q3 EPS $1.72 versus $1.45. That looks
Wow,
good. Revenue
they
42
make money.
42.8 versus 39.29 on the rev. That looks good as well.
Making money. But again, this has just been the story. The automotives always, the last few quarters have come out with really good numbers. And it seems like they pop and then they give it back. And I mean, we're starting to see the same thing already here in the pre-market because, Joe, how high have we got here on GM this morning?
$34. If you talk about your nice round numbers, you got up to 34 even, and then you've backed off a little bit. That's nice. That fills a gap that you had. Maybe I don't know if it was from a earnings report a while back, but you did have that area as a gap area. Here we are. Boy, that's a long time ago that happened. That was back at the end of 2015, and you had a high at 34.30, a low of 34, tight range day, and then you gap down the next day. So 34, I mean, if it can get back up there, I expect that to be major resistance. Already given back some of those gains.
Still leaking.
Yeah,
I'm
33.
scared.
Yeah, scared to buy it, huh?
Yeah, because
32.98.
it's just that last report. I remember Ford had really good numbers and it was way up in the pre-market, and then it turns around and they started hitting, and you can see actually after that it actually went down over $1. So I don't know. I don't like the fact that it's already given back two-thirds of the gains this morning on a pretty good report. It's just like these stocks just can't get any love. I don't know why that's the case, but the big Ford and GM just can't get the love even when they report good numbers. The dividend yield is pretty awesome at 4.54%. Ford's dividend now 4.95%. Ford is ex-dividend here today for 15 cents, so you can do the adjustment there. But I don't know. It's just hard to get bullish these things because it seems like they just don't get the love.
And someone had a memo yesterday, gained 94 cents yesterday, its biggest move as that's had in a long time. So important to hold the close of 32.98.
It's just stocks have been giving back. The Under Armour gave it back. Visa was up. It gave it back. General Motors is now leaking. It's almost down here just right now as we're speaking. It looks like it almost wants to go red right now. I watched Merck here this morning. Merck reported earnings, was trading way up in the pre-market, up near $62. It has now given back the gains, is trying to go red here as well. Spencer, quickly give us the Merck numbers here because this is a stock that a lot of people trade as well.
Q3 EPS $1.07 versus 99 cents, looking good. Revenue 10.54 billion versus 10.18 billion, looking good there as well. They did narrow and raise their guidance, their fiscal year EPS from $3.71 to $3.78. That was the estimate was 375. Revenues of 39.7 billion. Up to 40.2 billion is the new revenue estimate there for the fiscal year.
It's just the fade trade. The fade trade is on here because this stock popped up on those pretty good numbers up to 61.75. Was trading some volume up there in the mid 61s, and now you look at it and it's trading up only 20 cents, and you're thinking, man, this could go red too on a pretty good report.
I actually had a daily high here at 62.62. That was back on the 18th. You just missed that on the initial surge to 62.50. So buck and a half away from that. Boy, keep an eye on 60.63. That was the low from yesterday. Closed near the low of the session, and this thing is a little bit in danger mode here, Dennis. If we cannot hold this area, the stock has gotten a lot of boosts from the troubles over at Bristol Myers. Forget what those trials were. Kept on popping it up near 65. This is a weekly chart here.
Yeah.
Trying to hold on to the gap here. I mean, there is a big gap in Merck here. Actually, that low, that is the lowest level that it has traded at since it gapped up originally on the bad BMY news. You got a gap down to 58.23 here.
Scary.
Yeah, if this gives
Yeah.
way.
Gets it in there under 60, and you could be a 58 in a heartbeat. So, yeah, a little bit scary. It needs to hold here. It needs to be up on this report today. And if it starts giving it back, you start thinking about that gap fill trade there. A couple other ones. Eli Lilly is the other big pharmaceutical stock that did report earnings here this morning as well. It is trading in the red too. So it's been down for 7 days in a row coming into the report, but doesn't matter. Seems to be down here again. Spencer, what are the numbers for Eli Lilly?
Q3 EPS 88 cents, versus a 96-cent estimate. Revenues of 5.19 billion versus a 5.28 estimate, so not good there. They did maintain their fiscal year EPS guidance and raise their revenue outlook, but not good on the earnings.
They're hitting it.
They are hitting it here, down up 78 cents to 76.79. Pre-market low is way below that. You got a pre-market low at 75.14. But for right now, we are trading above that recent low of the move at 76.45. That's the bogey. That was your low on September 2nd.
Okay, 3M, DuPont, Valero, Whirlpool, UTX, Sprint, SAVE, GLW, Lockheed Martin, AK Steel, JetBlue, Coach. Lots of earnings that report here this morning. We're going to move away from them. If you want to know any of those technicals, we'll jump back into them. Let us know. But we got some stocks in the chat. Stock Jock, new to the chat, welcome. He wants to touch on Solar City. Well, I'll tell you, the Solar City chart is dependent on Tesla and also obviously dependent on what Tesla votes if they actually vote to go through with the takeover of Solar City. But it's really just tracking that. I think the ratio, I'm just going off the top of my head, is around 0.11. It's somewhere in there. So basically, for every dollar move of Tesla, Solar City moves 11 cents. That's the risk-arb ratio. Now, there's a lot of risk involved in that. And, as headlines come in, and if the deal looks like it's not going to go through, Solar City will get hit. The deal looks like it is going to go through, Solar City is going to go up a lot. So that's, what to consider there. But you want to watch the Tesla chart when you're trading Solar City.
Yeah, nah, Tesla's just been all over the board here. The dips under 195 have been bought with a vengeance, so that's your major support. Just rounded off there at 195. 205 on the upside. We snuck over there a couple days ago, but couldn't hold those gains. Trading up 69 cents here. Keep an eye on 206.56. Above that, you have a gap to fill up at the 208 level. But man, oh man, I'm just not that bullish either of these issues here. So. I mean, if you're waiting on this merger to go through, you need it to go through because if it doesn't, we have some dire predictions for Solar City.
Holy cow, UA. Go back to it. We just
saw
talked
that.
about this 2 minutes ago.
I
It
just
was
saw
38 and a half. It's now 35 and a half. It just lost $3. They must have said something on the conference call. It just lost $4. It's down at 35 here right now. It's in
They
a free
must have
fall.
said something really bad, like Steph Curry's not wearing her shoes anymore or something like
Yeah, I
that.
don't know. But that is unbelievable. Literally, we just talked about this 2 minutes ago. This is telling you the fade trade on the earnings is on in full force here right now. UA was just trading at 38 and a half. It's now $35 even. They absolutely murdered the stock here in the last 3 minutes there. This thing's one of the most choppiest stocks I've seen in a long time off earnings. Up to 40, down to 36, back up to 38 and a half, now down to 35. That's volatility, folks. That is crazy volatility. We're going to talk at our Detroit seminar there next month on November 12th. We'll tell you how to trade these earnings reports, and how I approach these earnings reports because I trade them a lot. I trade a lot of them. I haven't been trading the UA. That one's a little bit crazy, but there is ways to control the risk a little bit in these things. I don't know about controlling the risk when this thing's chopping around dollars, though.
All right, let's take a quick break and bring in Drew Marcus, managing partner and portfolio manager of Sugarloaf Rock Capital, and we're going to talk this AT&T Time Warner deal. We'll be right back with Drew.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we have Drew Marcus on the line, managing partner, portfolio manager of Sugarloaf Rock Capital, and a former, or I guess still a fraternity buddy of mine from Michigan. Drew, how you doing today?
Good morning, Joel. Go Blue.
Yeah, go Blue. Nice victory on Saturday. Drew concentrates on the telecom and media sector. But before we go to this AT&T Time Warner deal, I just want to get your general opinion on just like all these mergers and acquisitions going on in the markets right and left here. I've seen some people make it like symptomatic, kind of like of the internet bubble, the frenzy in the markets. Is this something that has you a little bit worried about the overall markets, all the M&A going on?
Well, I think the M&A is being sparked by the low cost of capital, number one, and number two, by the generally slow growth in the economy. So people are looking to enhance their growth rates by bringing on new assets, and because of the low cost of capital, they're very easy to finance.
Okay, so low rates are the key to that. We'll see. We'll see if that can continue. All right, at that tailgate, we were talking about this AT&T Time Warner deal here. A huge discount being shown by the street, whether it's the leeriness of how long the synergies are going to take for the deal, or whether or not it will actually go through. But you kind of had some positive comments on it, Drew. Give us your take on this merger.
Well, this is a classic case of distribution combining with content. Obviously, AT&T is distribution. Time Warner is content with CNN, HBO, the Turner networks with their sports rights. Interestingly, from a regulatory perspective, one could argue the Department of Justice shouldn't even review it because they don't look at vertical integration. They look at horizontal integration. However, maybe because it's election season and, at least, Trump came out right away and said he wouldn't approve it. So maybe that's caused some potential scrutiny. But on paper, this should be an easy deal to approve. But in America right now, bigger is not better, and that's what is a cause for concern. Wall Street right now seems to be only thinking there's like a 40% chance of it going through.
Drew, when you look at this and it's got like a 20-point discount from the takeout price, I know they're saying it's a year and a half. Don't some of the risk arbs have to lick their chops a little bit looking at it, though? Because here it is. It's only 6 or 7 points up from the place it was before the takeover rumors even started. So, I'm looking at it, seeing about 7-point risk on the downside. If it does go through, there's 20 points on the upside here. Wouldn't risk arbs, look at this and think, even if there's a 40% chance of going through, that's pretty good risk reward, when you're only looking at 7 on the downside and 20 on the upside.
Yeah, I agree with that. I think part of the discount, well, first of all, probably about 10 points is just time, as you mentioned.
Yeah.
The rest is uncertainty. The reason I think just right now on October 25th, why there's so much uncertainty is because we don't know the new president. Maybe we do, but we don't know for sure. We don't know the new president. We don't know who that president is going to put as head of the Department of Justice. We don't know who that president's going to put as head of the Federal Communications Commission. So A lot of the exercise you go through to determine the riskiness here, it's hard to do without knowing those people in place.
What about other deals in the sector here? Like I know some people were talking about CBS and Viacom getting back together there. There's been rumors about Disney looking to do some M&A there. What do you think? Now this has been a big deal in the sector. Is this going to kickstart some of the other media companies?
I think it will. I think that there's been a little bit of a logjam. There's been you need to get rid of the free radicals, as Dr. Malone at Liberty has been saying. So, the free radicals would be Lionsgate, AMC, Discovery, Scripps. Maybe you could see a consolidation among those as on the content side. Clearly, the Redstone family appears to be exerting their governance to get CBS and Viacom back together. But, as part of that, if you think about it, Viacom is in play as part of that. Now, they could block it, but if they are going to be capitalists and get the best price, if Viacom's in play, Viacom owns Paramount Studio. That's owned just like Time Warner owns a studio, so that's interesting. Lionsgate, of the names I mentioned, owns Stars, which like HBO is a subscription service. CBS also owns Showtime. But yes, I think that you'll see more consolidation in the sector. Part of the reason is that multiples have been depressed. The entertainment group's trading at 8.4 times 2017 EBITDA. The Time Warner takeout is at 12 times. That's a big enough gap that should get some more deals to follow.
Do you think that discount that the traditional media companies are trading at is a result of everybody moving to social media here now? And maybe it's the Facebooks, and there's so many other social platforms here now where the younger generation is watching stuff. Is that what's eating their lunch?
Yeah, it's lower. It's lower subscribers because people are doing more over-the-top OTT subscriptions and skinny bundles. It's lower ratings, and then the internet stealing share. I mean, if you go back and look at the internet is now the largest advertising medium. It's up to 35% of the ad pie. In 2008, internet was only 12% of the ad pie. Interestingly, TV has actually moved up slightly. At that same time period, it's up 4% to 33%. But obviously, print is the one who's really lost the most during that time period. It's down to 12% of the ad pie from 34%. But if you look at media consumption, interestingly, media consumption is up about an hour in the past year, as it's easier to consume. But all of that growth is in the smartphone and the tablet. Smartphone and tablets get about 2 hours and 10 minutes consumption, which is up 49 minutes in the last year. TV is actually holding steady at about 5 hours a day.
Hey, Drew, quick question for you about the Tronc-Gannett merger. It hasn't been announced yet. I want to know if you have any thoughts on that one.
I think Tronc is being very they're resisting, obviously, and Gannett is usually in media where there's smoke, there's fire, and here there's more than smoke. But the Tronc guys just keep on saying no. They sold they've been trying to sell assets and defend against it. I don't know how much Gannett's willing to overpay, but I guess Gannett wants to have a more national papers or more of a national platform of local papers to go with USA Today. Usually in these things, the deal ends up getting done. And Tronc doesn't have, you can only just say no for so long.
Drew, there's been some talk here and some speculation for content about Netflix. And Google perhaps is a suitor. I mean, man, to pay up for the PE that Netflix has. I mean, what are your prospects for Netflix or for Google taking them over? If you're looking for content, I mean, they do have some good shows.
Well, I think of the bigger names, if you look at you had mentioned earlier, like Disney. There's makes a certain natural sense for Disney and Apple to get over. In fact, the Jobs family owns a lot of Disney stock. The Netflix, interestingly for Netflix, they have in their history never made an acquisition. I mean, never, not even one, which is pretty shocking. But Netflix trades at 56 times 2017 EBITDA. It has an enterprise value of $55 billion. So at that multiple, I would say that even for a Google, which is 500 billion of enterprise value, even for a Google, I'm not sure they would pay up by that much. But Netflix seems very happy to go on its own.
And also content. We kind of had a little discussion about Twitter at that tailgate here. They got the content. They seem to be having a real hard time. Earnings coming out on Thursday. Any thoughts on Twitter?
Twitter, once again, it's been struggling to achieve, a true, people want them to get to the billion user mark. They've obviously got stuck well below that. They're having some execution issues. I think they have, it's just a mass of unfiltered content. And I think most of the companies want things that are a little bit more targeted. But Anthony Noto is a talented CFO, and I have a lot of faith in him as doing a good job for the company. But they seem to be in a tough spot.
And finally, evaluating the AT&T Time Warner deal versus the Verizon and Yahoo, who also picked up AOL here. Who do you think got the better deal?
Well, the AOL and Yahoo are really in the scale of Verizon, very small deals. You could almost say it's an experiment. Well, obviously, the Time Warner deal is a commitment by AT&T. It's an interesting deal in that it doesn't have a lot of synergies, but it also, from AT&T's perspective, you're buying a cash flow machine, which will help them pay their dividend. So I think if they can get through the regulation here, I think it could be a very interesting. The Time Warner AT&T combo could be a very interesting longer term.
We've been on the line with Drew Marcus, managing partner and portfolio manager of Sugarloaf Rock Capital. Drew, great talking to you. We hope you have you on again when we get some more news in this sector.
Okay, thanks, Joel. Thanks, Dennis.
All right.
Thanks, Drew.
8:32 here. So risk arbs there. I mean, I like the comment that he made, regarding, the regulatory concerns here that, they shouldn't even be looking at this. I'm sure that will not be the case within an election here, Dennis. But does that get you any more tempted to perhaps, take the risk?
I like it in the low 80s. If Time Warner's to pull back here, you know how I love, and my setup here, on all these deals is that when there's rumors and, the rumors, or if there's a deal and it comes back to the price where it was before the deal, I see almost no risk there. So 80-81, I love the stock. So 5 points lower here. It's a matter of, is it going to get that low or not? I want to jump back into UA. This is absolutely incredible. They pulled the rug out from underneath it here. It is in the 32 handle now here, Joel. And we are talking not even about, we got to go back out to the weeklies now, and you actually got to go back to the beginning of the year. 31.62 was the beginning of the year low, and that's the level it looks like it's going to test here in the next few minutes. This thing is trading so much volume right now. Almost 2.1 million shares have traded here already this morning, and they did. There's been a lot of comments coming from the conference call here. They're seeing the different fourth quarter numbers there. So obviously, that's what is driving the stock down here. They're not liking the commentary there, and this is just an incredible sell-off here.
If I can add some comments from Citigroup this morning, they said that the fiscal year 2017 guidance needs to be in a 25% range for the stock to go up. They maintained a buy. This is Citigroup maintained a buy in their $50 price target. So the fiscal year guidance was not
$50 price target.
Yeah.
This is at 31.
Well, yeah.
I think the Citigroup guy needs to check out what the stock. It's trading right now at the 52-week low here, just right now. 31. So we go back. 31. This is a huge level. 31.62 right here in the pre-market. Somebody's trying to defend it. Multiple bids there at 31.65. Let's see if it gets defended here. But I don't know. It's so much momentum right now. It's like cutting through every level like a hot knife through butter. There it is, 31.49. Took it out.
31.45 here. 31.61, as Dennis mentioned. That was a low for the year. Boy, oh boy. You go back to October of 2014. $30, Dennis. Will we get to $30 here today in this kind of down move?
I don't know. We might get $30 in the next 5 minutes. But it's being defended here at that low, though. It's just bounced up 31.51. I know it cut through it by 20 cents, but you're talking about a stock that just fell $6. Not going to be perfect. That's a level. This is a big level for it. It's trying to defend there. Maybe that holds. So that's your level we were given to you live. 31.60. It's right there. UA.C, remember that one trades too. So you know that one's following suit there. But this is not only now knocking down Under Armour. This is knocking now down. Nike is down $1.50 here now. Foot Locker is trading down almost $1. Lululemon, LU is trading down $1.50. This is all because of the Under Armour collapse here. So you're now seeing the retail stocks really start to take a hit.
And S&P futures are trading up to almost 3 points, 2 points off the high of the session. So Honey Badger and the Spoos here, just kind of ignoring what's going
Spoos
on here.
ignore everything.
Going
I
on
don't know why that is.
in the retail sector here.
Wow.
Dennis, I saw earlier in the chat someone said something about you manning Twitter last night or getting some info.
I was just tweeting out that they cut 8% of the workforce, which we were already mentioning there. So what do you think, though? Now we got the earnings report coming up here shortly. But here they are ahead of the report. And one of my Twitter followers was making a good comment there. Let me just go. I'll give her a shout out there. This Teresa Crescenzi was saying, I hope I said your last name right, why would they announce, head cuts days before the earnings? Why not at the earnings? Why do you think that's the case? We can do a lot of speculation here, but the earnings report is coming up here in just a few days. Why not wait to announce these job cuts, in 2 days? Does that mean that they're going to miss earnings and they're trying, ahead of time to let you know that we're cutting expenses here already? Because I don't think that's a good sign they're cutting expenses ahead of their earnings report.
Yeah, Dennis, me and you were jawboning about this last night here. And, boy, the 18 straddle going here right now is going for about $2. And, your theory is this thing's going to 14 or, could make
I think if it doesn't get taken over and when the dust settles, it could be back in the 14, 15 area there. That's where I like it from a fundamental perspective. Right now, I think if you're buying it on speculation that there's still maybe a deal in the works, which is possible.
All right, but man, it's even tough buying this because we talked about buying the straddle here. If you're paying $2 for the straddle, holy mackerel! If it goes to 16, you break.
Is that what the straddle is right now? $2?
Yeah, it went out. Yeah,
So
I'm looking at the
money.
weekly. Yeah.
For this week.
I'm looking at it right now. It's
come on! You're gonna pay $2? It's 10%.
No, I'm not.
Oh, that does not sound. Oh no, it sounds so expensive. I know the Netflix one sounded expensive too, and it paid off, but I just don't see how anybody makes money buying these straddles. Not when they're that expensive. What do you think?
I don't know. I mean, it's, I'll probably just go out and do one leg, and then we'll have like a 6-point move in the other direction. So I don't know. I mean, they should have decent earnings. They had the Olympics. They've had the debates. They've had the elections.
Well, why are they cutting expenses then? Why are they knocking 8% of the workforce out here last night if they're going to report good earnings? That's I'm looking at Teresa's point here from my Twitter, and I kind of agree with her. I think that this could be a disappointment just because they're giving you a little tell when they're cutting expenses ahead of the earnings report. I'm concerned. I'm concerned about the Twitter earnings report. I'll say that.
All right, Under Armour not getting much of a bounce here. Still down 630.
That level though.
Yep. At least we found it a point where it didn't exactly just blow through here, but 2.8 million shares have changed hands here. Dennis also mentioned Nike and some of these other retail stocks getting a hit on it. So, yeah, your leader is Under Armour. We're going to take a quick break and talking about options and option spreads and straddles. Who's better to talk about that than Nick Shaheen? So we're going to take a quick break, and we're going to be back with Nick Shaheen, the author of Create Income with Option Spreads. Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. We are on the line here with Nick Shaheen, options expert and author of Create Income with Option Spreads. Nick, how you doing on this crazy Tuesday morning?
Doing great. Great show this morning, you guys. We've been covering it pretty well.
Well, thank you very much. All right, it's going to continue here with some of your commentary, and
Mhm.
before we hop into the stocks, let's go macro here a little bit, and this range bound market here, kind of getting into the middle of earnings season. What's your macro take?
The macro comment, usually when I have a write-up, my write-ups are pretty lengthy because I try to cover everything, but I usually highlight a few things that are like true and simple to understand. And I can tell you that we see seller exhaustion that's obvious because we keep running into this roof and come back on the S&P, for example. So it is seller exhaustion I mean, buyer exhaustion of some sort, but the markets are still dangerously bullish. All they need is just one reason or two, or I call them rabbits. They just need any rabbit to run, and we've got plenty of rabbits on hand. The earnings are one, and you have the elections, you have OPEC. There's no shortage of headline sources. Maybe no hike in December. Who knows what they're going to do? So be cautious shorting, even though it makes sense to short. It's very enticing to short. They have to be cautious. Coming from somebody who likes fundamentals, and the fundamentals kind of say you should be shorting at these levels. Yesterday, I pulled up a heat map that had nothing but all-time highs. I posted it on StockTwits, and they picked it up. So there's so many big guys at all-time highs. It just scares me to come in this high up in the game. So the macro, although scary, is still not too scary for the buyers. So it is dangerous in both ways. So don't overcommit one way or another. Hedge your bets, whatever they are.
Nick, let's just jump back into this Under Armour here again. And how do you play something like this? I mean, here you are after an earnings report. It gets an initial pop to $40, then it sells off to 36, then it pops back up to 38 and a half, and now it just completely collapses and falls 16% here. Is this something, you approach like you're an options trader here, but if you're looking at it here and buying puts, you're making money. But, a lot of times, you look at them and you sell puts. This is, something where you obviously protect yourself by buying lower puts, but how do you play this something with this much volatility all of a sudden?
When something moves this big and this far out of expectations, I looked at Under Armour a couple of days ago, and I made a few comments to a friend, and one of which was the path lower was easier based on what I saw in the options market. But I did see support around 35, 35.20. So obviously that didn't hold up. So when there's this much of a move, I zoom out, and I posted a 5-year chart, weekly candles, which kind of like eliminates some of the daily noises. And you can see that in theory, it's head and shoulderation pattern. So 31.30, 31.20, I think that was the low last I checked this morning. It needs to hold, or, I mean, go back 5 years, almost 3 or 4 years, you'll see that's where it was, where it leaped up to that level. So it has to prove itself once again that this indeed will be support. I would rather wait out a candle, depends on the volume today, and rather than grab a handful of blade on this falling knife. So what's wrong with missing a few upside shots? But even if you do want to commit to it, instead of buying the stock, you may be able to dabble with a cheap debit call spread or something. Maybe give yourself time. Don't buy like the ones that expire in 2-3 days. Then your timing you may be right in your thesis, but your timing may be a little bit off. Joel knows about that, right, Joel? So give yourself time, pay up for a little bit extra time. Then your thesis will have a better chance of working out.
All right, we have Apple earnings after the bell here, and Gap and Go off the last report here, kind of inching up. I mean, did you already do your pre-earnings play here and cash it out, or maybe just get?
I did, but it was a while back. I obviously did not catch the best place to get out of my longs there. Meaning I left money on the table, but I never worry about that. If you're in it for the long haul, you have to accept leaving money on the table. Otherwise, you can't be in it for the long haul. Then you'll be saying, "Oh, I should have." So it is. It's okay to leave money on the table. So I got out early, but you can reset. I did buy a few call spreads out there for Apple, but I am not expecting as big a blowout as the market is. So for once in a long time, I think there's so much plugged into the Apple's expectations for the earnings. I don't think we've had this much enthusiasm expected on an earnings from Apple in a while because of the T-Mobile and the Sprint comments, like historic sales introduction for the iPhone 7. Um, what if it's not? And that's the one time Apple chose not to report its own earnings to take that mystery out. So, yes, technically it had a date with 120-ish. I think I may have mentioned it here. If not, I definitely tweeted it somewhere. But I'm not buying it with both fists here, which bring us to a point that I always make to all my friends and family that the short-term reaction to earnings is a complete coin flip, more gambling than investing. So what do I mean by that is the market will react based on whatever they think they saw or heard, and regardless of the earnings beat or miss. We've seen earnings that are questionable, and the rally is tremendous. The short-term reaction is always a gamble. Therefore, I only play it with lottery tickets, meaning I spend enough money that won't break my heart if I lose it, but it'll make my day if I win.
Nick, let's jump into other earnings reports here from this morning. A lot of different sectors. We saw, Visa report here last night. We've seen Caterpillar, Procter, Gamble, General Motors. Let's go just jump into and just get your commentary here on General Motors for a second, because we were saying earlier here, you see the automotive companies there, and they seem to always report pretty good numbers, yet they just don't get any love from the street. GM did run up ahead of the report there yesterday, but this is a pretty good report, and here it is. It's already given back all of its gains again. Why do you think it is that General Motors and Ford don't get any love? Is Tesla going to really change the world, or is Apple coming out with that flying car that you talk about, and that's going to put the end of GM and Ford? Because here these things trade with almost 5% dividends. They make money like crazy, and the street doesn't give them any love at all.
I think it's the legacy issues that they've always had. I've always said, and I'm guilty of that. I've always said that I can count on them messing it up one way or another. Labor issues, recall issues. I think after the recall where they got hammered, there was too much love for it. Everybody thought, oh my gosh, they hired this genius and she's going to save it and whatever. So I'm not so convinced that they are able to shake their legacy problems. I can tell you, I owned a GM vehicle. I will never own another one again. And I was open to it. I loved it at first, but turned out to be a nightmare. And the biggest part of it is the dealerships themselves. Not to insult anybody, but it's hard to get excited when you walk into a dealership. It's not as inviting. I own Lexuses, and I've owned them for 20 years maybe. And every time I walk in, it's just I don't dread going to a dealer. I get treated nicely. The cars are reliable. And in fact, yesterday, I think the report came out in the last couple of days showing Toyota and Lexus. But the comment that scared me, that we were happy that Buick made it to number 3, and it was like the first time in a bazillion years any American company jumped in there. That shouldn't be that way. And until that changes, I think it's hard to get excited over a few beats here and there from GM. That's my opinion. It may be a div payer and all of that. Yeah, that's great, but it's not very exciting. As far as Tesla's concerned, it made it down to like number 25. The Model X was like the 6th worst of all cars, or vehicles, I should say. So I'm not sure that GM is down because Tesla's up. I mean, GM farts at Tesla a day. It's not worried about GM. But
can we quote you on that?
Yes, you can. You can.
GM farts at Tesla a day. That's got to be one of the best quotes we've ever had
on the show. I know that's.
Yeah. There you go. You're welcome.
Oh,
so it's not down because of Tesla.
No, and we didn't have to have the beeper or the buzzer on that either. Procter and Gamble here trading up $3. A good report here. Dennis was just talking about the danger of shorting this in the 86 handle because he would give it to 88. Man, Dennis, you may get a chance to look at here at 88. I know you're not the biggest fan of these high dividend paying stocks. Good report here. Man, 87.10. Give us your thoughts on Procter and Gamble.
Okay, so it had a few bad days going into this, right? So
Hallelujah.
The expectations were that not very great because they already either somebody knew it was coming or whatever. The market already punished it, and now they're bringing it back to basically where it broke apart around the $87. I think it was last I checked, 87, 10, 12, something like that. So that was the point that it bounced off. That was the floor board that it bounced off of from lower highs until the floorboard gave way to a trapdoor all the way down to 84. So now they're back to that floorboard. So now they have to retake it. Otherwise, that becomes, you've heard it. Prior support becomes futures resistance. So they need to prove that wrong in order to get excited from here.
All right. Also, after the bell, I think we have CMG here. What a trading range we've had here. Give us your thoughts on CMG.
CMG, the way we traded it is we sold an iron condor with a huge range. And that's a winner. And we close it. I don't get to hold it into the earnings so not to get blown out by one stupid comment here or another. So it is a violent move for the stock based on earnings. Not earnings, the headlines. I think those are behind it. But it does have a big range, so don't be a hero. I hear a lot of people, they try to take iron condors into earnings. Like we said, it's a gamble into the earnings, and I can guarantee you not one iron condor survived the Netflix earnings. Well, not one is mathematically survivable. So what if this high energy stock does the same thing as Netflix? So pick your direction. Buy a debit spread if you want to participate in it based on your expectations. And your guess is as good as any other expert guess out there because you don't know what they're going to do short term. Longer term, okay, you can play your thesis out. But the short-term reaction, you better be ready for some pretty elastic moves, especially from a name like CMG.
All right, Nick Shaheen, options expert, author of Creative Income with Option Spreads. And if you want to learn all these fancy terms and ways to trade the options market, join us here on November 12th. Thanks a lot, Nick. We'll talk to you again soon.
Can't wait.
All right, Dennis, did you get down and dirty in UA at 31.61?
Oh yeah, but you know me, scalper blood. I bought at 31.62, right at that level there, and I bought it actually. I let it go through. So, and this is something we're gonna talk about in Detroit too, and something you've taught me, and it works very well for me. But don't buy it on the first time when it's just going straight down and just try to be a hero and stop it. But it paused there, and you could see it starting to build some momentum at that level. Cut through it originally, and then it came back to it, and it's just kind of hanging there. And then, it's consolidating there for a few minutes. Okay, now buyers are starting to emerge at this level, and that's when I pulled the trigger. Now, of course, I sold it just, when it popped up because that's a scalper blood in me. So I sold it for a quick 30-cent gain, and obviously it's up another 30 cents or 40 cents from that point, or 30 cents from that point. So, but so don't follow me on. And I've never been good at exiting trades, but I've always been pretty good at entering them. So, if I could get that scalper blood out of me, obviously there was more money there because it popped up to over 32.5 there very quickly. But that's the thing is the key with the entering is I think not just buying what's going straight down at it, wait for it to maybe cut through it because it sometimes does do that, and then come back up to it and then try to hold it and pause and then start to build some momentum to the upside. So let the momentum be your friend. Don't try to fight it.
All right. Then, it moved down, it's already had an $8 range here. I think it'd be interesting once this thing opens and, just the real liquidity comes in and just watch it trade in a 50-cent range for the entire day. Probably would be a little bit bigger than that. But Under Armour here getting a little bounce over the $32 level, so we'll be keeping an eye on that.
I know we've been having some problems with the stream. I've been having problems with it as well. So be patient with us here because we are fixing this problem. Today we are embedding a new service into the stream. So these cutout problem will hopefully be solved.
Yep, I think we solved it. I did paste the YouTube Live link in the chat at the top of the show.
And that's been working smooth.
YouTube Live has been perfect today.
So that's what we're doing. We're embedding YouTube Live into the show here today, and that's going to hopefully solve the issue because whatever we're using there to embed it right now is not working. So problem is going to be solved, and UA is back to that level here again. Look at this, going to give us another shot.
Yeah, it's going to give you another shot. You know, the second time it's coming down. It's not as good as the first time here, but we'll see what
True.
happens. Pre-market low 31.21. We'll see if that 5.2 million shares have traded.
Oh,
And
wow.
and
5.2 million.
yeah,
It's going to be a record day for UA. It's never trade volume like this.
yeah, and let's see. Has Nike been able to get off the mat at all here? Boy, you
Not
got
really. No, it's down. Well, a little bit. It's down a buck. That
but
50 is big on Nike. If you trade Nike, just big round whole number, that's where I was going to win my bet and it couldn't quite get there or something for me. Remember that, Joe, when you got me Nike, you got me by that little bar. What was it? I didn't have 50 and you had 60. And I think that's what it was. And it got up and went to 60, 33, and then it's come all the way back down there. And I just got stopped out on my bet, my lunch bet with you by like 20 cents.
And yep, there it is. Wait, where was that? That was a while ago. Whoo! Look at that, Dennis. Boy, Dennis.
I even paid him one of those lunch bets last week. I went over there and bought him lunch.
Dennis.
So he owes me 2 steak dinners still, though.
Dennis bought here is what we could put a little caption here.
Dennis, yeah, his bet was, well, I was an option, and you exercised me there.
Okay, that's
put it
better.
that way.
It's better.
Joel exercised me there. I didn't want to buy it there. Joel exercised me on the option there.
All right, analysts are kind of quiet because we're in the midst of our earnings season here. Apple, kind of, as Nick was saying, kind of high expectations. I just want to alert our traders and investors tomorrow morning at 8:20. We will have the top Apple analyst on in the country, Gene Munster from Piper Jaffray. He'll have a chance to digest that earnings report. And if you folks can remember, when we had Gene on after that last report, he was like, 2 reports ago when it got hit, he was encouraging you to stick with the stock, and last time he was pretty happy with the report as well. So be interesting to get his take on Apple earnings.
I still like Apple too, but it's been a heck of a run up here ahead of the reports. I'm a little bit scared, and that 120 is a big level.
All right, Downward Dog is coming up with a stock here in the chat, one I don't think I've ever heard of, IPGP. Boy, oh boy, that's
going off the board on this one.
All right.
IPG Photonics. I've never traded this one here either. It trades at $80 stock. It trades, it's a smaller cap stock, but obviously it's got some movement here. I'm just looking at the weeklies and the dailies. Nice consolidation here at an 82, and then it's starting to find some life here. Yeah, as long as it's above 82, I kind of like it.
82, 4 or 5 lows in that area.
Yeah.
And big on
now
the upside.
Now starting to get some gas.
Got to get over 86, though. 86 had 3 highs there. Little gap to fill, kind of in the middle between 82 and 86.
Quick, Dennis.
Again, it's all about risk reward there, and that's, you can put any trade on. I'll say it all the time. I'll say it next month in Detroit. You can put any trade on as long as you know where your out is. When I look at this, I think my out is below $82. And so if I'm buying here today, I'm risking 2 points and, maybe going, maybe you're thinking about 88, maybe going for 4, something like that. Or if you like your 1-to-1 risk reward, then you're going for the 86. I like a 2-to-1 risk reward. I've always set them up that way. But I always think risk first and then return.
Dennis, top of your head, what does IPGP do?
I have no idea. Photonics, they do photonics. What do they do, Spencer?
They make lasers and they sell those lasers to equipment manufacturers. Yeah.
Lasers.
Yep. I thought that was cool.
All right, quick rundown. S&P still trading up $1.75 here. Excuse me, the high from yesterday, 21.49. High in the session so far, 21.49.75. We'll be looking to clear 21.50 for some continued upside. On the downside, you can't get serious about any downside action until you take out that pre-market low of 44 even. You have the daily close right there. 8:59 jam-packed show today. I hope you guys have and gals have enjoyed it. Spencer, what we got onto the docket for tomorrow?
We got Tom Milacki tomorrow as well as Gene Munster, as you said. If you listen to the show and you've heard us talk about Benzinga Pro and you want to learn more, check out pro.benzinga.com to get a free 2-week trial of our premium product. You can also call us at 313-960-2000. Mention that you're a listener of the show. There is a discount involved for an annual subscription there. But again, a free 2-week trial. Just go to pro.benzinga.com and check out what Benzinga Pro is all about. If you missed any part of our show today, you can catch our podcast. It's on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or PreMarket. And also, if you think time is running out now to sign up for Joel and Dennis's 2-day trader workshop, it's in a couple of weeks. Throwing the link in the chat in just a moment for you. You can also just Google Benzinga 2-day trader workshop. It's second week in November, so check that out if you want to actually come to the Benzinga office in Detroit and meet Joel and Dennis in person and learn from them for a pretty full day and a half. Nick Jaheen will be there and Marie Band will be there, so pretty good jam-packed weekend there. Please always remember that all the information, material, and content from our show is for informational purposes only, not meant to be investing advice. So that's it for us today. Hope we covered about as much as we could. We didn't cover everything, but there were a lot of earnings today. There are going to be some big ones tomorrow too, and after the bell today. So it'll be another jam-packed show. We'll try to get through as much as we can. In the meantime, have a good rest of your day, and we will see you guys tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.